Friends, in this video we'll break down all the key events shaping the market, from the reasons behind the latest drop in macro data to the ETF situation and the wave of liquidations. But that's not all. At the end we'll talk about one very interesting altcoin that in just a few days has created a huge buzz and become the #1 topic in the crypto community. So make sure to subscribe, hit the like button, and let's get started. Friends, before we move on to the market overview and then to promising coins, please note, this video is not financial advice. It only reflects my personal impressions and market view. Always do your own research and invest wisely. Let's start with the main point: why the market ended up in the red zone. The #1 reason: sharp liquidations of long positions. Traders went too heavy on leverage, and when the price started dropping, we saw a real cascade of liquidations. That added extra pressure and poured fuel on the fire. The second problem: weak ETF inflows. Institutions are in no rush to put capital into crypto, and this cold sentiment is weighing on the whole market. Add a strong dollar and rising bond yields, and you get the classic picture of money flowing out of risk assets. Macro data didn't help either. US Q2 GDP growth was revised up to 3.8%, which came as a surprise. Investors immediately worried the Fed won't hurry with rate cuts. You can clearly see this in the odds on Polymarket. On top of that, jobless claims came in better than expected, once again showing labor market resilience. All of this works against the narrative of, the economy is weakening, rates can be cut quickly. Now let's look at market reactions. Bitcoin dropped approximately 3 to 4% and is trading near $110,000. Ethereum looked weaker, down 4 to 5% around the $4,000 level. Solana also corrected after its recent rally. Overall, crypto has slipped 2 to 3% in a day, and market sentiment is clearly depressed. Stocks added more pessimism. US indices fell to weekly lows, with tech looking especially weak. Chip stocks and big tech names dropped faster than the rest. And again, it's the rates factor. Hawkish Fed expectations lowered the probability of an October rate cut from 92% to 83%. What's next? The market is now living in anticipation of the upcoming PCE data, a key indicator for the Fed. Any surprise there could flip the outlook. After that comes CPI and the next Fed meeting. As long as the dollar stays strong and yields keep climbing, it'll be hard for crypto to show stable recovery. But there are also arguments for a more optimistic scenario. Markets rarely move in one direction without corrections and new impulses. And if you want more analysis like this, make sure to subscribe to the channel. Now let's move on to the interesting altcoin. Friends, let's talk about the coin that's been dominating headlines and chats in recent days: Aster. And here's an important note. I highlighted this project in my Telegram channel long before all this, so those who follow updates there were already prepared for this scenario. So, what is Aster? It's a new format decentralized exchange. It allows trading on both spot and perpetual markets with leverage up to 1,001 times. But its main feature is the trade and earn concept. Your collateral assets don't just sit idle, they can generate passive income while you trade. Essentially, it's a mix of an exchange and a DeFi product in one. Aster didn't appear out of nowhere. It's the result of merging several projects, Asteris plus APX Finance, backed by YZI Labs, a group linked to Binance. And here's the key. When a new DEX has ties to the Binance ecosystem, community attention skyrockets. Add open support from CZ himself, and you've got a recipe for viral success. Now, the numbers, and they look insane. Open interest jumped from just a few million to over $1.2 billion in a matter of days. By this metric, Aster has already surpassed Hyperliquid, a project long seen as the rising leader among decentralized exchanges. Daily perp trading volume exceeded $24 billion, already comparable to centralized exchanges. TVL nearly tripled, from approximately $625 million to approximately $1.85 billion. The Aster token itself gained over 2,000% in a week. The market has found a new sensation, but it's not just about numbers. Aster also secured powerful support from venture players. Galaxy Digital, for example, invested around $270 million into the project. CZ mentioned ASTER multiple times in his posts, even noting it's now one of the largest USDT holders on BNB chain after Binance wallets. When figures like that openly highlight a project, it's clear why interest explodes. Another story, drops and rewards. Aster launched Stage 2 airdrop right from the start, allocating over 50% of the total supply to community distribution. This shows the project is betting on massive user growth. The point system works like this. You earn points for trading, holding, referrals, even for using specific margin assets. Later, these points are converted into Aster tokens. Right now, Stage 2 is in full swing, distributing more than 700 million tokens, with applications open until mid-October. It's a serious tool for building the community. But let's be honest, when a project rockets into the top ranks within days and surpasses competitors on key metrics, there's always a flip side. A significant portion of tokens is concentrated in whale hands, creating the risk of sharp dumps. Plus, the earn while you trade model hasn't been tested at this scale. For now, it's still an experiment. Critics are already calling Aster a hype project, and some even outright point to scam signs. That's why balance is crucial. On one hand, Aster has quickly become one of the loudest projects of the year. It got support from the Binance ecosystem, CZ'd, big VCs, and surpassed Hyperliquid in just days. On the other hand, such rapid growth always carries risks, and it's important not to fall blindly for the hype. When we talk about Aster, it's impossible to avoid comparing it with Hyperliquid. For a long time, Hyperliquid was considered the main breakthrough among decentralized exchanges. It had a strong user base, its own native token, steady trading volumes, and even became a symbol of the new wave of DEX. But in the last few days, the picture has changed dramatically. While Hyperliquid shows daily perp volumes of around $9 to $10 billion, Aster has shot past $20 billion. If Hyperliquid's TVL is growing gradually and steadily, Aster made an almost threefold jump in just a few days. In terms of open interest, Aster has also already overtaken its competitor, more than $1.25 billion compared to Hyperliquid's lower figures. Still, it's important to note, Hyperliquid grew organically, gradually building its community. With Aster, we're seeing the effect of hype, fueled by airdrops, aggressive reward programs, and very active backing from the Binance ecosystem. This creates the impression that Aster is moving faster right now, but also carries significantly more risk. So, to put it simply, Hyperliquid is a more stable story without explosive numbers, while Aster is a flash that dazzled us very quickly and could just as quickly swing back the other way. But the fact remains, by key metrics, Aster currently looks like the new leader. And that's all for today. Remember, these are just my personal thoughts on the market, not financial advice. Always do your own research before investing. Thanks for watching. Don't forget to subscribe, like, and stay tuned for more coin reviews. See you soon.